So what happened in the 2024 real estate market?
We're here to let you know that for sure.
And stay tuned to the end because we're going to have some 2025 predictions for our South Orange County real estate market. I'm Jim.
I'm Vickie.
And we're with the Bishop team, your leading realtors here in South Orange County.
All right, Jim, let's kick it off. What do you think was the single most influential thing that actually happened in 2024?
Well, it wasn't a musician, it was interest rates. And everybody pretty much across the board thought that interest rates would be going down in 2024. They did for a little bit. We started about 6 3/4 in Q1, went up to 7.5 in Q2, down to 6.1 Q3, but ended the year at almost 7 1/4. So net up throughout the year, despite the Fed cutting rates starting in September several times through the end of the year, did not translate to mortgage interest rate reduction. That was the biggest thing.
Sure, so hovered right there in the 7s and the 6s.
Yep.
So the most surprising thing in 2024 was?
Interest rates didn't go down despite some efforts towards the end of the year, and what that did was it kept sellers from wanting to sell, and it kept some of the buyers out of the market waiting for interest rates to go down. And what they ended up doing is missing out on some of the market that appreciated, that we'll talk about here in a minute.
Sure, and then there were others who did jump in and they got it at a higher rate in those 7s, and when it dipped, they quickly refinanced. Not common, but it does happen.
There was a big wave of refinancing in that Q3 when rates went down. The benchmark went down to about 6.1. And that was kind of short-lived, but a lot of people were able to reset their mortgages.
Let's sum up 2024 as tight as we can with stats, your favorite thing.
Well, we look at them as a way to tell us what's going on in the market. So a couple of things, supply, demand, and all of that. Demand was up a little bit. The number of homes that sold was up about 5% in South Orange County, so more sales. What drove that? First of all, more inventory, more homes for sale. At the end of the year, there were 83% more homes for sale at the end of 2024 compared to 2023. So buyers had more choices. It wasn't, this is the one house, 20 people are gonna try and buy it. Now they had some choices.
Sellers were ready to go.
More sellers were like, look, that pent up demand, we're gonna sell our house. Yep. With more choices on the market, buyers took a little bit more time to buy a house, so that made homes stay on the market longer. Sure. So days on market or expected market time was longer in 2024, and that's okay. 7 minutes on the market is a little bit tight.
That was a little frenzied before.
So a lot of industry experts said that mortgage rates would come down with the Fed cutting the short-term interest rate. The Fed did start doing that in September, had several rate cuts, but what we saw is that it's a common misconception, it did not translate into lower mortgage rates.
Why?
Mortgage interest rates tend to track the 10-year Treasury, not the short Fed rate. So even though Fed dropped their rates, mortgage rates ended up going up higher, and that was a big surprise to a lot of the experts.
You may be able to refinance in the future, so date the rate, marry the house.
Right, and if you can afford the house and rates go up, you're still in the house at a rate you can afford. If rates go down and you can refinance, you just lower your payment for your home. So one of the questions we get is, where did our sellers go? Where did our buyers come from? We saw a normal range of what people were doing this past year.
Sure, 2024 really marked I'm going to sell or I'm going to buy because of lifestyle changes, whether that be I have grandkids being born in another state that I'm going to move to. I've decided I want to live closer to the ocean. We had several clients move closer to the ocean, wanted sunset views, etc. They were just lifestyle changes in general that people were making. Some were right-sizing their home, getting out of the family home with the 6-7 bedrooms, bonus rooms, etc., pools that they didn't want anymore, and just getting into the right size for them and their stage of life.
So one of the things we saw on several of our listings and for some of our buyers, first-time buyers in the $2 million range, and that has, as salaries have gone up,
right.
Buyers may be waiting a little bit longer and buying, rather than starting in a 1-bedroom condo, they go right into a nice 4 or 5-bedroom home with pool and a view.
Sure, there's a lot of people now that have 2 incomes in their household. Their jobs are really steady and stable. They're doing very well, and they're just jumping straight into that home that could be their forever home at the $2 million plus price point. So that is happening now in 2024 and beyond. I think that will probably carry on through the ages at this point.
Some of our clients we saw were corporate relocations, and like Vickie mentioned, family relocations, whether the grandkids are in Texas or Tennessee or Florida. They're moving to be closer to the family and the grandkids.
And vice versa. We also had grandparents move in to South Orange County to be by their children and grandkids. Maybe they raised their kids here and they went away to do whatever for 10, 20 years, and now they're coming back to be back with their adult children.
Yeah, so that's one trend is grandparents moving closer to kids and grandkids, and we've seen that over the last several years.
Sure, and then we've also seen, which isn't a super fun, happy, exciting story, so not always fun, but some of our clients, and they told us this before, the only way I'm leaving my house is I'm gonna get carried out in a box. They made their final home in the best resting place ever, and those homes did go for sale this year as well.
So now we're dealing with family members, whether it's kids or aunts and uncles, that are dealing with the estate, helping them sell mom or dad's home and settling up the estate.
So if that's your situation,
it's an honor to help your family get through this difficult stage in life and help you make the moves that you need to make as people move on. So in 2024, we saw a little bit more normalcy in terms of the seasonality to see why people are moving. People move up, move down, and move out, and we saw kind of back to that.
And normalcy for days on market and how long it takes to sell a home and how many homes, how much inventory is out there. So kind of a lot more normalcy than some of the crazy years that we had where, again, a home was on the market for 5, 6, 7 minutes and you had multiple offers.
That being said, we saw inventory levels still extremely low, 40, 50, 60, 70% below where we had been previously. So while the number of homes for sale was up, like we said, 83% at the start of the year, it's still down 50% from where we were a couple of years ago. So low choices in general with the lower number of buyers. So a little bit of predictions for 2025. Some of the biggest things that we face, we talked about interest rates, and that's still an issue. Like we said, starting the year, we're above 7%. The other thing to keep in mind, and unfortunately, as we're filming this, LA is on fire, but insurability has become a huge issue in California. It is now the insurance contingency. It is built into the purchase contract. You have companies that have left California, and now with the new fires, getting insurance is going to be even harder and more expensive. So coupled with higher interest rates, higher insurance rates are something you need to work into your budget. Figure out that sooner rather than later. Don't wait till the day you're supposed to close escrow to figure out. It's not $3,000 to get your insurance, it's $10,000. Those things need to be looked at right away. Another thing that we expect to see here in 2025 is with higher interest rates and higher insurance rates, that's going to keep a cap on appreciation in our opinion this year. So rather than 12%, I think we're going to see probably half of that. Now, interest rates come down, it might pick back up, but that's what we're looking at this point in January of 2025. So let's talk about what prices did in 2024. We saw an overall appreciation of about 7% in South Orange County. That's for the year of 2024. So about 0.5% a month. That's a good, healthy appreciation. Also relatively sustainable compared to 13% in 2023, 29% in 2021, 24% back in like the 04-05 time frame. So those were years that had extraordinarily high and unsustainable appreciation, but 2024 was pretty solid. Now we did have a little dip towards the end, so we had been up closer to 10, 12%, came down a little bit at the end, but overall up for the year. Some cities were flat, like Ladera. Other cities saw a lot more appreciation. So every area is a little bit different, but that's the overall average, was 7% for the year.
All right, we're gonna give you our 2025 predictions in 3 easy things: prices, inventory, and buyer demand. Jim, tell me what you think and what we're hearing from the economic gurus our prices are gonna land in 2025.
So everything else aside, it comes down to supply and demand. Demand is affected by interest rates and insurance rates and availability, but supply and demand rules the day. So what we expect is we had increased demand in 2024. We see that continuing into 2025. Not to levels that we've seen in the past, but above 2023 and 2024. Factoring into that will, of course, be interest rates. If they go down, we'll see seller activity pick up and we'll see buyer activity pick up.
Okay, so what about inventory?
So that's our supply. We've seen that come up steadily through last year, see that continuing so that we have more choices for buyers, more sellers on the market, more time on the market, which will also keep prices from appreciating at that higher rate.
So no skyrocketing on the prices, probably.
Correct.
That's the prediction. Okay.
But from a supply and demand standpoint, we don't see supply way outstripping demand such that prices go down.
Circling back to that third thing, buyer demand.
Yes, as previously stated, that's affected by interest rates. So if interest rates do ever go down, we'll see buyer demand pick up and people will get off the fence and say, hey, it's time to buy. There was a poll that said 24% of a certain segment of buyers after the election were going to enter the market that weren't in the market before. So keep an eye on that. We track supply and demand and interest rates and all of that on a weekly basis.
Sure, and even just as we're filming this, it's the first week in January. We have already seen a jump in buyer demand in this first week in January as far as like showings, open houses, how many buyers are out there looking, etc. So that's what we're seeing.
And that's a normal part of this season. Slows down into the holidays and then picks up. So we'll see rising demand, rising supply, and how they keep up with each other, that's going to affect prices. So stay tuned in the future to watch our videos that'll keep you up to date on what's going on there. To get those updates, make sure you subscribe so that you can get notifications when our market updates do come out.
Sure, and we love having our crystal ball out and we love telling you what we think is going to happen in 2025. Even better to tell you what happened in 2024 because we know that those are facts. But whether you're looking to sell or looking to buy, whatever your situation might be, we would love to come alongside of you and help you through the process, chit chat with you, find out what's going on in your life and what your goals are and where your next move is.
Helping you navigate through whatever market is key. It really can make a big difference for you and your family, and that's what we're here for.
Sure, that's the most fun part of our job is really getting you to your next spot and being with you on that journey. So make sure to give us a call. We'd love to hear from you. I'm Vickie.
And I'm Jim, and we're with the Bishop team, your leading realtors here in Orange County, California.
See you soon.